Welcome to A View from the Edge. I'm Glen McLeod, founder of Edge Mortgages, and in this edition, I have Allan Mearns, Head of Practice and Insurance Advisor from Spratt Financial. We've asked Allan to come along today to talk about why insurance is so critical when you're making your borrowing decisions. Today we're going to ask Allan 4 questions. Why is it so important to get an insurance review when borrowing money? How often should we have an insurance review? What type of insurance do you offer? And how can you save money on insurance? So welcome, Allan.
Hello.
Nice to see you. So tell me, why is it so important to have an insurance review when you're borrowing money?
It's a critical time because you're changing your circumstances. Insurance allows you to maintain control over your financial independence. Whether it's general insurance, which looks after your physical assets of your home or your business, or whether it's life or disability and health insurance, which looks after your ability to continue to earn income, to pay the mortgage, to access doctors and medical facilities when you need to, and to continue to develop your long-term passive income creation. It just allows you to get on and finish those things where something could happen and prevent you from actually doing that yourself.
Yeah, it's a real concern. So how often should you get an insurance review?
Well, insurance is, the greatest enemy of insurance is time. It's time, and planning suffer for time. So if you look at what your life was like 2 years ago, you may have found that there's a number of changes that have occurred. You might have to look into your credit card statements or your bank statements and just see if there's changes in habits brought about by increased income, an increased number of dependents, an increased size of the loan, and other things which have impacted your life without you realising quietly over the past year or 2 years. If you just have a quick look once a year, that's probably enough to pick up those signs that something's changed. And if it's not, well, every 2 years is something that should have to look. And if you're going to buy another house, or whether it's a residential or an investment property, that counts as a change in circumstances.
I understand that if you have children, it can also count as a change of circumstances.
Change in everything. Change in circumstances, especially because of your responsibilities and one of the other things that you had set out to do long term, which is support your dependents. If something changes, then insurance allows you to continue to finish that.
Is there any other aspects around like changing jobs or anything like that
Sure.
would trigger?
I guess the big thing in your life, if you're looking at bank statements, is what goes into the account. And if that's changed because you've had a promotion, a new job, an additional source of income that's come into your estate or your family, then that could also be time to sit back and look at how has that impacted on you.
Fair enough. So, the exciting part, what type of insurance do you actually offer?
Well, in the various parts of the Spratt Financial Group, we have product, service and advice which focuses on physical assets, houses, buildings, contents, cars, whether it's your home or your business. And on the other side of the business, we have the products and services and advice which relate to changes in your health on the life side. So anything which affects your health and your well-being long term, we can help with that as far as alternatives to what you currently have, to see if it still fits and if it's worth including some of the changes you've already found.
So things like health insurance you have?
Yes, we have health insurance. We deal with all the main health insurers. We deal with all of the other retail insurers for things like lump sum payments to cover debt and income and mortgage payments, and of course the ability to save and put money into your retirement, so if something traumatic happens to you, then we can put that lump sum which you would have generated yourself over the next X number of years.
So would you sort of think that life insurance is the basis of your plan, or?
It's the least likely thing that happened. I think of the 38,000 people that died last year, only 3,000 of them died suddenly. All of the rest of them die slowly as a result of a medical condition, almost all of them. So once that starts, cancer is the biggest individual killer of New Zealanders. Once that starts, the changes are quite insidious, but they're relentless. The first thing that could happen is that your income dies well ahead of you dying. So in that period of time that it takes, then you could reduce your mortgage, pay your mortgage off, put money into your savings, into your superannuation, because you might be around a long time before you finally leave us.
One of the things that I say is that one of your biggest assets is your health and your life.
Sure.
Fair to say, I guess.
Yes, I think we have a lot of experience with people making health insurance claims, and if they're able to do that quickly, deal with problems quickly, then the outcome is far better for them.
Yeah.
And they get back to resume their life with little apparent effect.
So, how can you save money on your insurance, Alan?
The most important thing is to look at what has changed in your circumstances. There are a number of areas within insurance where you can save money if you check to see what's changed. You may have been a smoker, and if you cease smoking, then that could save you 30% on the premium. There could be additional charges being made by the insurer on you because although you've reached your ideal weight, you haven't reached your ideal height yet. So once you get that under control, then the insurer would probably go back and sit back and say, yes, we could reduce that premium for you on that case. There could be a number of other things. You could increase excesses, like on your health insurance premium or on your car insurance. You could, in general, increase the waiting period on your income protection policy from 4 weeks to 8 weeks or 13 weeks, and that decreases the premium. Or it could be just a matter of seeing what else is new in the market today. We would go back to your existing insurer and see if they can make any changes, and if not, then we would look to see what else is out there that would suit you better.
Yeah. As you've heard, I highly recommend having insurance as a part of your overall financial package. We've had over the years a number of clients that have had insurance claims, and that's saved not only their family home, but it's actually been a major part in allowing the family to move on from sudden events. If anyone close to you hasn't got insurance and you'd like to have a discussion with Allan and his team at Spratt Financial, we'd highly recommend them. So get in touch and we'll put you on to Allan and his team, and they can help you with a plan and see if they can save you money all at the same time. Until next time, this has been A View from the Edge.